Well, they've broken the system. The system is absolutely, truly, and utterly bankrupt. The Fed they're like a ringmaster, at a fair, and they're hoping to keep the audience engaged, but the audience is just losing interest because you can see what's happening. The amount of debt is extraordinary. I think I heard recently it's going to hit $90 trillion.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. Today, my guest is Stephen Flood. Stephen is the CEO of Goldcore, helping investors around the world invest in gold and store gold safely for about 20 years. Stephen, welcome to the show.
Oh, it's great to be here. Thank you for having me on.
Stephen, you have an illustrious career. You worked at Goldman Sachs, I believe, for many years, and you have started your own company about 20 years ago. It has been doing very, very well. Why gold?
Well, I suppose I came to it accidentally. My old school friend, Mark, started the company. I joined a few months after he started the company back in 2003. He came to the idea of providing a precious metals investment company and service to the Irish market initially, because he was worried about the way the market was going. Post-Euro, there was an awful lot of speculation in our property market, which eventually culminated in the global financial crises and the collapse of many Irish banks, which had to be bailed out by the Irish government to huge expense, which we're still paying now and will be paying for many generations to come. But he saw, he was quite prescient. He saw that there was huge speculation. Market prices were going up 20-25% a year. And he realized what was going on was highly speculative. And he set up the company, and he invited me to come in with my experience from financial services and working in Wall Street. As you say, I worked in Goldman Sachs as a sales trader for many years. And prior to that, I worked in Bankers Trust, where I really learned an awful lot about how the markets work, about technology, about risk trading, settlements, and everything like that. So I had a really great education from Wall Street. So I was able to myself and Mark were able to grow the company with our team here, and we're 20 years later now. He actually sold out there about 2.5 years ago, leaving me in control. And we've grown the team since then, and now we have an office in California. And essentially, the why gold? Ultimately, it's the oldest form of money, probably the only real form of actual money in the world, in the sense that it can't be debased. It's a unit of measure. It's a unit of exchange, and it's a safe haven. And it really passes all the tests that if you look at the dollar, the pound, the euro, the yen, they all fail miserably. They're all being printed. There's massive inflation. They're no longer a unit of account. They're not a safe haven in any way like they should have been. And investors now need to at least allocate a small portion of their investable assets in something like gold and precious metals in order to gain, I suppose, financial insurance, if you will. So something that will protect their portfolio in times of uncertainty. And that's the real function of gold. So we're experts in it. We've got thousands and thousands of customers all over the world, and we are very ethical, very client-centric, very service-led, and we enjoy hugely popular. We're hugely popular with our clients and their families, and we take that very seriously. That role of trust that we have and we've built up over the years.
You mentioned that, in your opinion, the role of gold is to secure, right, or to provide an insurance against someone's portfolio in case something bad happens in the market, etc. What would you recommend to be the ideal allocation for gold? What % of my portfolio should be gold?
Well, it's a great question. I would first want to know where you are in the investment life cycle. Whether you're young and you can take lots of risk and take lots of losses and take a chance for higher returns, or you're older and retiring and you want to really preserve your capital. So I think if gold is in a speculative cycle, and it does go through speculative cycles, it has blow-offs, then I think people who can take higher risks should go into it. But it depends. So young people could then invest in gold and hope to make a return because they can afford the risk, because of years of income ahead to pay back any losses. And then when you're older, you want a return of your capital, not a return on your capital. So to hold what you have, and it's a really good way of of saying it. So in that sense, I think the old Wall Street adage is put 10% of your money into gold and hope it doesn't work. And what that means is if you have 10% in there and 90% in other investable assets, in a normal market environment, those should be bringing back a return, albeit a diversified return. And gold should be kind of going sideways and maybe even down in good times, and that's a good thing, because you don't want all your investments to be returning positive returns in any one environment, because if that's happening, you're not diversified. You're positively correlated to the market cycle. So, but what gold does, and it's really, really interesting actually. If you want to nerd out on economics and history and everything like that, gold is a fascinating topic to study. It's when you buy stocks, you're buying a cash flow of future returns. That's the idea. And when you buy a bond, you're looking for a cash flow of coupons. And typically these things are priced based on the relative performance of one stock versus another stock versus a bond versus property. And that's what determines the demand. But gold is actually not bought for those reasons. You don't buy gold for cash flow, because it has no cash flow. It's actually cash negative, costs you money. So why on earth would you want to buy something that is essentially a liability? Because you have to hold it and insure it and store it. The reason is because gold is owned for contingent purposes. So it's a contingent asset. Its value will be determined by the environment in which it's bought, and it exists. And so when you have what's called risk off scenarios, that is to say, the broader market is very risk aware and they're shunning risky investments and they're risk off, they're selling those and they're buying things that are safe, like the dollar and treasuries and the yen and maybe some property and things like that. But they also go to gold. Because it's safe, it's considered to be safe. So right now we're in a kind of a mixed market environment, and stocks are kind of mixed and sideways, and there's a big debate as to what the future holds and what interest rate policies are going to be in place, and if they're going to work or not, or if the whole system is going to burn down and we're going to have to start anew. And there's all these debates happening. And so gold is rising and has been rising for quite some time. And in fact, if you go back over 20 years, and I think this is astounding, you look at the actual the annualized return on gold, and in dollars it's 9.2%. That's the annualized return per year for dollar price gold, and in euros it's 9%, not much different, and in pounds it's 10.7%. That's with Brexit and all the rest. But if you look at those numbers, they're all very, very aligned. Why is that? Well, the reason is because and it's not every year. Some years gold's up like 30% and down 20% in different things. But on an annualized basis, it's consistently up across all currencies right across the world. And on average, between 8 and 12%, depending on the currency. And the reason is not because gold is going up or gold is in more demand, but the reason is because these currencies are being printed. They are being printed and debased at an extraordinary rate. And that makes the stock market look great. That means property looks great. But if you actually go into the numbers and you look at, let's say, arguably the most important economy in the world, the US economy, and if you look at the average and the median industrial wage, which is really interesting, for the median industrial wage for a worker in America, in the United States, back in the year 2000, so 23 years ago, it was $32,000 per worker, and today it's $36,000 per worker. So yippee doo dah, they got a $4,000 raise in 23 years. But the average car has gone from 22,000 to 52,000. It's more than doubled. And the average house has gone from 168,000 to 446,000. Again, more than doubled. The workers haven't had their wage increased or doubled at all. So what's happening is there's more debt in the system, and it's right across the world. I mean, the actual debt per capita, or the debt per divided by GDP, is north of, probably kicking on 300% now. And the last financial crisis, I think it was about 240% or something like that. So it's gone up to extraordinary highs. And so that's a real trend. That's a super trend. And so we are indebting ourselves. We're more interest rate sensitive. our workers are relatively poorer, and our stock market and our commodity markets, our cars and our houses and everything else, they've gone up in line with the printing of money. And those who own assets are, they're doing really, really well. The people who own apartment blocks and buildings and companies, they're doing great because their assets are going up, measured in debased dollars. But the real workers out there are actually becoming impoverished. And Thomas Piketty is a famous economist, wrote about this, about the inequality and what's happening out there. And it's extraordinarily serious. And we don't know what the world's going to look like in 10, 15 years. But if it continues on this path, it's going to become increasingly unstable. And if you look at inflation trends over the course of history, whenever you have inflation breaking out, typically conflict follows. That's what that is proven in history. So in that backdrop, something like gold, which can't be printed, and it makes you sovereign as the individual. So when you own gold, you are sovereign. You are financially sovereign. You are the master of your money. No one else matters. And I think that is an amazing place to be. I mean, if you have money on your mobile phone measured in pixels, with an unnamed server and an unnamed provider and thousands of intermediary systems and complex processes regulated in different ways, versus an ounce of gold in your other hand, I think I know what's going to be more valuable in 10, 15, 20, or 30 years. So that's the core case to own precious metals, and gold in particular.
And it sounds like you're kind of pushing the conversation toward Bitcoin. And I want to get back to that in a few minutes. But you mentioned something about the debt in the system. And right now, what is your personal outlook on fiat currency in general? I mean, I'm talking mainly about the US dollar, right? Because right now it seems like the Fed is in a tight spot. If they keep raising interest rates, the economy might crash. If they lower interest rates, that means they go back to money printing and debt creation. How do we get out of this? And what does the future of fiat currency look like?
Well, they've broken the system. The system is absolutely, truly, and utterly bankrupt. The Fed they're like a ringmaster, at a fair, and they're hoping to keep the audience engaged, but the audience is just losing interest, because you can see what's happening. The amount of debt is extraordinary. I think I heard recently it's going to hit $90 trillion when you take all of the debt together. And it's gone like a hockey stick. It's logarithmic, excuse me, which means the rate of increase is gathering pace every period. And so ultimately the debt servicing of higher interest rates, the US government, will mean that they'll spend more on interest rate payments than they will on defense. I think that's actually this year they've actually surpassed that. So if you think about America and its defense, which defines America's, projected power and world status and all sorts of different things, they're actually going to be spending more printing money to pay the debt, to pay the interest, not even to pay the debt, to pay the interest on the debt of previous years. And now that they have helicopter money, as Ben Bernanke termed, there's no restriction on these politicians. So you're seeing a presidential cycle kicking in, and they will literally fall over themselves to print money and try to promise everything to the people, while taking their liberties by removing their money and removing their savings and removing their pensions. This is not conspiracy theory. This is fact. Go and look at the numbers. And it's horrible to say. I mean, because I wish there was no market for gold. I really wish that gold was nothing but a trinket, an ornament, because that would say that we have a fair system with good bankers, good processes, good regulations, good politicians, which are focused on the people. So if you look at the dollar, I think the dollar is doomed. I think most currencies are doomed in the longer term. I don't know which way they're going to fall. I don't know how that's going to happen. What was really interesting this year is there's two stories in the last 18 months is they weaponized these foreign reserves of the Russians in the Ukraine conflict by blocking them from their foreign reserves. And so that was a huge Rubicon moment for the dollar in terms of, just abusing that control. And that, I don't think that had happened before, other than Iran. I think they've done that with Iran, maybe very in a mild way, but nothing on the scale that they did to the Russians. And I'm not commenting on the war in any way. I'm just talking about the fact that that they weaponize the dollar. And so if you're a central banker in any other country in the world, the heretofore implied promise that your dollars were part of the reserve currency of the world and were safe, and your domestic policies were your own, is now gone. Now it's politicized. And so that means you're going to hold other currencies and enter the Chinese. And the Chinese want to have a reserve currency. Some people say they don't. I absolutely believe they do, because it's an exorbitant privilege, as the French one said. So I think the American economy and the American government have lost any sense of fiscal responsibility. They are printing and printing, and they have no other options. Interest rates go up, that cost servicing goes up, and there's no guarantee that inflation will be stopped either, because of all the printing of money that's happened before now. So I don't see a way out. I think it's all rhetoric. I don't believe that they have any credibility at all at this stage, and I'm not sure which way it's going to go. I really do fear that these things, and history tells us that, we might be entering into a period of sustained turmoil, financially, geopolitically, and I hope to God it doesn't get out of hand, and we're able to turn it around or reset or rebase. But the language doesn't seem to be there. The conversations don't seem to be happening where people are going, okay, let's learn from the past. Like, you work in a company. I work in my company, and one of the most important characteristics to have when you have responsibility is to have humility. We don't always have the answers, but we have to be able to ask the right questions. And they're not asking any questions. They're just falling over themselves to print money. And it's a tragedy. It really is.
Getting back to China, I believe that both the Chinese government and the Russian government have been piling gold for the last 5-10 years. They're always on the market trying to increase their gold reserves. Where do you think that's headed? And do you really think, how soon do you think we'll see this shift in the global reserve currency? I know no one has a crystal ball, but what are your outlook on that?
Well, I'm not convinced we're going to have any one reserve currency. I think we might have competing currencies for quite some period of time. The Chinese have significant structural problems, that they have to overcome, and I don't think for 1 second that their system of government is compatible with liberal democracy, and that's not to say conservative versus liberal. It's just liberal democracy in general. So I don't see them as being compatible. Now maybe they're going to soften that or do something. I don't know what their strategy is. But they've been awakened. They've been prodded. They've been, there is we call it the industrial complex, the military-industrial complex. They've been activated, and I think it was Bonaparte who said that beware of waking that dragon. Because if China awakens, the world will shake. I think I'm probably completely ruining that quote, but it was something to that effect. Just don't go doing that. Don't go kicking them. So I don't know what's going to happen. I think probably a number of different currencies. I think Europe is actually not in a bad place. Some people, in the past, I would have been a little bit more pessimistic on the European project, but it's looking increasingly better in terms of the other alternatives out there. I wouldn't count the US out at all. I just think that the American business community are the greatest we've ever seen in the world. I mean, we've never seen a better trading mindset, a culture of innovation and entrepreneurship. And what's come out of America is just astounding in the last 80 years. So I wouldn't count it out. I just have lost faith in the current cohort of political leaders over there. I think it's just one is as bad as the other. So but maybe they will turn it around in some way. I don't know. Maybe AI will come to the rescue in some way. I don't know.
Stephen, let's bring it back to Goldcore. Tell us about Goldcore. How does it work? What does the typical client experience look like?
So it's fabulous, but I would say that. But we are very proud of our rating. We since 2012, we go out and we ask every single client to give us a rating out of stars out of 5. It goes up on our site in lights. If they say good things, it goes up there. Bad things, it goes up there. We have no control. We're 4.9 out of 5 over, I think it's about 2,500 reviews, which we're really proud of. It's almost perfect. The team here are just absolutely second to none. I mean, there's I don't think there's any bullion specialist out there that can provide the same level of service that we can. We're very, very trusted, and we take that responsibility very seriously. Essentially, the client process is they open up an account, and that can take as little as 3 minutes to do. It's very simple and intuitive. And then once the account is funded, they can buy precious metals. And typically, we'll settle those in a few days. Our fastest ever settlement was 2 hours, I think 14 minutes, where we were able to settle kilo bars on the shelf in a vault in Zurich, numbered and on the system and ready to be verified by the client, which I think is probably a world record. So, but we really pulled out all the stops to make that happen. We were going for a world record that day. So yeah, at the end of the day, what you're buying is not a proxy instrument like an ETF or mining share. You're buying physical gold and physical silver sitting on a shelf. And this is really important. It's segregated and allocated. So it's allocated to a particular bar format, which is always LBMA, London Bullion Market Association approved from a approved refiner. So high investment quality. And it's segregated on the shelf, so your gold and my gold never mix, and so they're separated there, and they're ready to be moved whenever you want. And then what we do is you can see all these on the Goldcorp portal. You can see your serial numbers, do your P&L, you can buy and sell, see your cash, whatever you want to do. Talk to us. But then what we also do is we actually give you the login credentials, and I don't think any other dealer does this. The login credentials to go into the vaulting company's system independently of Goldcorp. So you're logging into Zurich, into the actual vault, and you're having a look at under your account number what is stored on a real-time basis. And there they'll have all your bars and coins, and where appropriate, serial numbers, which will perfectly align with what you have in your Goldcorp portal. And it's important to remember that these assets don't sit on our balance sheet, and they don't sit in the balance sheet of the vaulting company. You're literally buying gold outside the financial system, and it's there ready to be sold. And it's important because gold in physical form is the most valuable asset in times of extreme uncertainty. So you can trade that very, very easily. It's very, very liquid.
And I think that's a really important thing that you mentioned, was that these gold bars that your clients own, they don't sit on your books. They are actually owned by the client outright. And so even if something happens to Goldcorp, knock on wood, heaven forbid, you guys go bankrupt or some weird thing happens, the clients would not lose that gold that's sitting in a vault in Zurich.
Yeah, I can't say no chance, because God knows what the future holds. But literally, if we disappeared or were banned by some government edict or something like that, your gold, you would be you're probably inconvenienced from an administrative point of view. But ultimately, that gold would then be, you'd be told to listen, your gold sits in that vault. You need to appoint another dealer or open up a storage account somewhere or take delivery or go collect it. There'd be a physical step to be solved. But as I say, wouldn't be at the mercy of any creditors of Goldcorp or anything like that. Not that we have really any creditors, but you're insulated from those type of business risks that you would definitely have with other investment funds and other vehicles that are that would see you as a creditor.
And what is the minimum investment a client needs to make to become a client?
So it's $5,000 is our minimum, and our average is around 30,000 or so. And then we have clients who have 7 figures. In terms of trading as well. So we have a wide variety and eclectic mix of clients and trade sizes. But ultimately, those clients, they might be very active in the world. Like typically our client would be someone who has traveled well, read well, has a healthy skepticism, doesn't mind asking those hard questions, doesn't mind being unpopular at the dinner table, not totally opinionated, but we'll have those kind of, we'll ask those hard questions. doesn't toe the line. And I just think those people are so important in society. They get a hard time sometimes, but the person who doesn't toe the line and asks hard questions and needs to be convinced and needs to read up and doesn't just accept, they're the people who look at gold, because they can see what history tells them, that when you break out of and you have 2 standard deviations from the norm, to speak statistically in terms of market dislocations, or societal dislocations. Something like gold, it's no one else's liability. That's the really cool thing. It's not a house that needs a renter. It's not a stock that needs a dividend. It's a piece of metal that just sits there, and it's really, really rare. It's so rare. You could fit all the gold in the world into a 22-meter cube. It's the size of 2 semi-detached houses. It fits on a tennis court. Like, it's really, really rare. And it's money. Like, you and I could exchange it, and we may not even speak the same language, or look the same way, or be in the same industry, but we could trade gold, because historically our people know what it is, and we know what it is. It's fascinating when you put a gold bar in someone's hand who's never held it before. It's just amazing. It's like a million years of value just genetically wakes up and sparks to life in their hand, and their arm drops down because they've never held something so heavy in such a compact form. Nothing feels like that. So it's really cool.
Yeah, there's something intrinsic about it, because even kids, when they first start, hearing fairy tales and kid stories, and when they watch cartoons when they're kids, the treasure that they find is always gold coins. When there's a pirate, finding a treasure, it's always a gold coin, right? So I think people inherently understand that there's some inherent value in gold.
Yeah, and in the last days of the Roman Empire, there was an emperor called Diocletian, and he had a terrible problem, because the Roman currency, the denarii, had been continuously devalued over time, and they couldn't feed the people, and so he started bringing in food and trying to feed. And I think he was like 20% of the population was being fed through the state at one stage. It sounds like food stamps. This is what's happening today. But what happened over the next, I think it was over 50 years, the denarii deflated something like 50,000, or no, 42,000 times. It lost its value. So in percentage wise, over that time, over 50 years. So it basically became worthless. And we've seen that in Zimbabwe. We saw it recently in Turkey. You're seeing it probably in South Africa now. All across the world, these currencies eventually get abused and devalued. So ultimately, all fiat currencies fail in the end, in my book, and I think history tells you they do. And typically, these reserve currencies only last about 100 years, and the dollar is just kicking on 100 years old now, in terms of its reserve currency status. So I don't know who the new kid on the block is going to be, but I do think as an individual, an allocation of 10 or 20% over the next X amount of years, I think makes all the sense in the world. It really, really does.
Stephen, I believe you also deal in silver and platinum as well, other than gold. Briefly, tell us, what is the purpose of these other precious metals besides gold?
Well, silver is an interesting one. It has a different kind of industrial use case. It used to be very, very, very popular with photography, and then it fell out of favor. It's not as easily recoverable from the industrial process, where gold would be very easily recoverable. It tends to follow gold. And when you have from a price performance point of view, and about 25% of the assets we store for clients would be held in silver. And it's pretty constant. It's always around 25%. And we've always said, if you're looking at the long term and you can take a bit of risk, maybe put some silver in there, especially if you think the market is poised for a substantial gain. You'll find that silver tends to move twice as fast as gold, both up and down. But over the longer term, it tends to return the same as gold. So if you want to time the market a bit with your precious metals, maybe look at silver over gold. Have gold in there as a permanent allocation. Have silver in there as a little bit more speculative, which you can load up on in those times. You'll pay a bit more for it. And if you time it right, you can make some money. But I mean, ultimately, we don't really like the idea of telling people to kind of speculate, because it's not really our thing. But I'd say 75% gold, 25% silver. Platinum and palladium, they're more industrial metals. They're not really monetary metals, so they're very important in any kind of catalytic processes that you might see in industry and car catalytic converters, and other things like that. And they're very, very rare, but they get pushed around a lot quite easily in price. And I would say maybe in terms of our clients, maybe if I said 2% of the flow of the volume is in platinum and palladium, I'd be kind. So it's not really they're not really monetary metals, not in any real way. Maybe in the future they will be, but gold is definitely the main contender for the monetary crown, with silver following as well.
What are your thoughts on alternative gold-based investments, such as, for example, ETFs, or like GDX is gold miners, GLD I think is spiders, I think IAU would be iShares equivalent, where you're just buying a share in an ETF or a fund that owns gold?
Well, it's not our area. We don't sell them. So my own opinion about them is that again, they would be more leveraged exposure to a gold cycle that is considered to be positive. So if you think it's moving up, then people are going to move into those on a speculative basis. But they're not the kind of people that you want to kind of trust to be around, because they're very skittish, and they'll probably dump them as fast as they can when they want to. So I'm not sure about the long-term credentials of miners in particular. There are great mining companies who have excellent management, who are adept at extracting. But then to me, that's a business that you're investing in as opposed to gold. There's lots of other contenders for great businesses to invest in. So it's not really my area. I don't really invest in miners myself. I do think that people who, like a lot of my clients do, and they get really excited about it. But I think ultimately they're looking for a leverage play on the metal that they really love and believe in. And so, there's lots of other ways of getting leverage, like futures contracts and options contracts. And this is not investment advice, just to say, in case any regulators are watching. But there are ways of getting leverage that will also allow them to do so. So ETFs are excellent for speculation. I think if you have if you want to very cheaply get exposure to metals, and you're not doing so for systemic risk purposes, which is a different thing. So if you're saying, okay, I think gold is going to go up 10% and it's the best option on the block right now for an investment, then yeah, buy an ETF, because you might sell it next week or next month, and you want to do so as cheaply as possible. There are hidden costs in ETFs, and when you look at them, maybe you should read you should read the prospectus, because what you realize there is that if the systemic arguments for gold come to pass, you as the beneficiary may not have the protections that you thought you had. Everybody, as far as I can see, in those structures is indemnified should anything go wrong, or bad actions occur, like theft or incompetence or fraud. You're literally left holding the can, which has no gold in it. Whereas if you do believe in systemic risk, and you're saying, I'm not sure what the banking system is going to look like, or politically or geopolitically, then you want to have the real thing physically stored, and you want to pay storage in order to maintain its integrity, its monetary integrity. So our clients will typically, like some of the bigger clients we have, they might store across the world. So they'll store in Zurich, they'll store in Frankfurt, they'll mix their investments locations, and they'll store in North America. And they do so because they don't know what shape the world's going to be in, and if one location becomes compromised, some extreme political element comes in and just takes assets off people and paints everybody to be the enemy and blah blah blah. I mean, it's happened before, not too long ago. So what you can do is you can hedge your bets by having some in Singapore, some in Frankfurt. Zurich is probably the most popular, because it's Switzerland, and Switzerland's considered a safe haven. So I think ETFs short term, miners not really a fan. Gold for all day long for those systemic concerns.
Finally, Stephen, what are your thoughts on Bitcoin? I know some people refer to it as digital gold. Some people love it. Some people hate it. Some people believe in it. Some people don't. What are your thoughts?
Well, I'm a kind of a financial technology nerd. I love innovation and IT and on all of that. and I like history, and I like monetary theory, and all of these things. And I thought the advent of Bitcoin was just such an incredible event, because it was a grassroots response to the debasement of currencies. And it was a system that we'd never seen before. I mean, it was all theoretical, but then it became popular, and it was supported by disparate people all around the world, and the population, and it worked. Like, people were transacting and buying stuff, and without any regulation or central bank or any trusted middlemen, which is just, I think, one of the most amazing stories, and such a fantastic thing. Now, since then, the marketeers and pump and dumpers have gotten involved, and so there's an awful lot of mis-selling of Bitcoin as being the next great thing. And you have all these big tech CEOs, some tech CEOs who I won't name, who talk about it as being like the future in all respects. And they're telling people to mortgage their houses and dump all their investments into it, which is just the most reckless thing to say. I think it's just astounding that people can get away with that. But so I think it's a great technological innovation, and I'm delighted to see it. But it's not a currency, and it won't be a currency in the future. I don't think so. I think it'll probably die. It'll go the way of the dinosaurs. It's not particularly innovative anymore. It's actually fallen behind. It's not really keeping track. And what's really interesting is when you own a Bitcoin, you also own a part of an immutable ledger, which means that the history of it follows you. And if that coin was involved in illicit activity, criminality, stolen, fraud, well, guess who owns it today? You do. And you own that history too. And if it was found to be stolen and proven to be so, a court of law could determine that that no longer is your asset. It should be passed back to the person from which it came and from which it was stolen. So it's not the same as when you have dollars or euros, which go through a banking system, which actually washes them and nets them off. So you're just a ledger entry. In Bitcoin, you own an actual token, a registered asset, if you will, and you own all its history. Which I think is astonishing that people don't realize this, and they're holding these things thinking that that's it. And it's only as good as when you can transact it. And so, what if that thing was certainly all your Bitcoin was, or your wallet was tagged as holding illegal, ill-gotten gains, and then you have to explain yourself, and you're just like an accountant or a normal person, So I think it's interesting. Also, money is power, and power is political. And the authorities of the day, whoever they will be, will never allow the public to own uncontrolled currency, because they know that they control you through interest rates, they control you through inflation, by tax. You are not sovereign in any modern economy in any real sense. You're owned, and they won't let you have an independent currency. So that's my view, but you can disagree with me a lot. I don't know, but it's
No, I think that's a really good point about the history. That's something I've never considered, but you're right. It is on that ledger pretty much forever, right? Exactly where that coin's been and which wallet it has passed throughout the years. That's something I've never thought about. I think that's a very interesting point. Stephen, gold is just, I think, $20 or $30 under $2,000 an ounce today. Do you have any ideas, or no one can make projections, and no one should, but what are your thoughts on the outlook of gold?
I like the idea. In my view, I've thousands of customers, and they have families and friends, and they're important parts of people in community. The big win case for me, when I fantasize about the future and my clients and how they do, is that they will look back and be grateful that they own precious metals, because it brought a degree of calm to them when all other people were losing their heads in a crisis, because they knew that they took steps to protect themselves by diversifying their portfolio, and they weren't all in on the fiat-backed interest rate sensitive economy that we have today. So in the next financial collapse, and I'm going to predict that there's going to be another financial collapse, and I'm happy predicting that, because I don't know when it's going to be, but it's definitely going to happen someday. When that happens and that day comes, I think those who have precious metals in their portfolio, in whatever they choose to be the right amount, will be calmer and won't sell in a panic. And as I think they'll be better for it, because most people sell at exactly the wrong time. They buy at exactly the wrong time. Assets in general, they're driven by greed and fear and these base human emotions and jealousy, looking at their neighbors getting rich, and they lose their minds. So I think that gold in there kind of settles the mind and allows them to be properly diversified. Where I think the price of gold as priced in fiat currencies, it's probably not so much where gold is going to go, but how low those currencies are going to go and how fast they go to zero. And so I don't know when that will be, but I do know they're on their way there. So gold could be at $10,000 in 2 to 5 years. It would not surprise me. It could be still at 2 or 3. I don't know. But if the last 20 years are anything to go by, and the trajectory of where we are today, when you look at the maybe 360 degrees around us, and you look at the economically and geopolitically, it doesn't look like a happy camp. And I think gold will probably continue to appreciate and I think it'll probably break through some technical levels and continue on higher. With my feeling, there'll be pullbacks, but that's the way of things. And I think ultimately people shouldn't be you shouldn't watch the gold price too closely. You should really focus on things that you have responsibility for and control over, which is not the gold price. But you do have control over your health and your education and your family, and those are the things that we should really focus on. And the most valuable asset we have is time, and with the people we love, and that's the most important thing at the end of the day. And gold can help keep a happy house and keep you in some sort of financial security. And I think that's a good day's work.
Well said. Stephen, I really appreciate your time today. A fascinating discussion. Where can people reach out to you, and where can people learn more about Goldcore?
So I have 2 websites. Goldcore.com is our primary site, goldcore.com. You can open up an account there, or you can have a strategy session too. If you want to have all these questions to ask, you can set up a strategy session with the team here. They're absolutely brilliant. Nobody is paid a commission to make a sale. So it's really important. So there's no hard sale, which is quite common in our industry, unfortunately, especially in the United States. And then if you want to learn about gold before you contact us, you can download our guide called goldintheusa.com, goldintheusa.com. And it's based on Bruce Springsteen's song, bornintheusa.com, which we love. And so we saw it Gold in the USA. We call it that, goldintheusa.com. And there's some really cool, it's a great guide there the team put together here. And it has just some, a number of pointers to kind of guide you on that path. But I think it's really important that people look at gold. It's not so ancient. It's pretty cool. I think it's going to get a lot cooler, a lot more common. And you'll be hearing more about it, I think, in conversations at that dinner table.
Stephen, I appreciate your time today. Thanks very much. And I'll put all those links in the show notes, and have a wonderful day.
Thank you so much.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.